Hi guys, Craig here, Hunt Home Finance. Hope you're doing well. As I said in my last video, I will be now doing videos every week. So in this week's video, I really wanted to talk a little bit about shared ownership schemes and how really they may be the answer for some people who need to get onto the property ladder, but may be struggling with deposit sizes or lender affordability, which unfortunately is often the case. Now, to start with, I think we need to think a little bit about where shared ownership sits currently in the marketplace. Now, Help to Buy has really been a more current means for first-time buyers to get onto the ladder in recent times, and that Help to Buy equity loan has enabled people to buy properties with a 5% deposit, the government lending another 20%, and the additional left, the 75%, being arranged by way of a mortgage. Now, I've completed quite a few of those Help to Buy mortgages and arranged the loans, and that scheme certainly worked well for lots of my clients, but the Help to Buy scheme is actually coming to an end March 2023. So in reality, if you're still looking to utilise that scheme, you need to be aware that you need to have reserved your property and submitted your property information form to your Help to Buy agent by the 31st of October this year. So clock is ticking, not long left with that. So with that in mind, what does that really mean for shared ownership? Well, I believe that what that means is where it leaves shared ownership is it's going to in part fill that void left by the Help to Buy equity loan scheme once it's gone. Now, the industry with that in mind really has been making quite a few adjustments to shared ownership schemes in recent years, especially since 2021. And it means that shared ownership now is certainly more flexible today than it's ever been. And I think it's still probably the best option, and maybe the only option, for certain people to achieve their dream of home ownership. So let's have a quick look on how that works. The principle is quite simple. You find a property that's being built through and being sold through any number of councils, housing associations, developers. It's usually going to be a new build property, or it may be a resale of an existing shared ownership property when that person who's residing there wants to move. Once you've found the property that you want to buy, you would then usually pay a reservation fee, typically £500. It can vary, so do check and be aware that if you do not complete the purchase on that property, then that £500 typical fee is not usually refundable. You would then need to purchase a share of the property. Now, that share is usually anywhere from 10% up to 75% of the full market value. Importantly, you'd need to then provide a deposit, a minimum deposit of 5% of the share amount that you are buying, with a mortgage then being arranged for the remaining part of your share. The landlord, so housing association, developer, whoever, will then charge you rent on their share of the property value. Typically, that rent is calculated at 2.75% of their value of their share per year. So whatever that figure would be, you would then need to divide that by 12, and that would be your monthly rent cost. Now, rent can increase, so it's important to know that. It is reviewed yearly, but any increase is going to be capped, and it's capped at the RPI for the last 12 months, plus a maximum of 0.5%. Again, worth checking if you're going to go down that road. Now, there can also be service charge and ground rent that apply to the property, because all properties are going to be leasehold, not freehold, because you only own part of it. It isn't always the case though, but do check again. In a nutshell, what you're going to be left with is each month you're going to be paying a mortgage payment, a rent payment, and maybe ground rent or service charge on top of that. Now, the benefits here are that you can obviously secure your home, buy your home with a much lower initial deposit, because you're only going to be paying a minimum of 5% on your share, whatever size that may be, as opposed to a 5% minimum deposit on the full purchase price of a property that you would need to make the standard residential mortgage. So if you look at a bit of an example about that, it's certainly going to help with initial deposit costs and lender affordability as well. Here in Hadley, there are actually shared ownership properties, only a few, becoming available from September 2022, so next month at some point. They're actually priced from £270,000. So if we look at a typical example of how that might work, remembering that I am going to be using here mortgage rates from a current lender based on today's rates, and examples making assumptions based on the property based in Hadley. That may vary property to property, and if you're looking to buy properties outside of Hadley or other shared ownership schemes, whatever it may be, just be aware that these figures I pop up on the screen in a minute are a worked example, not set in stone, okay? But it's going to give you a good idea of how it works. So if we look at this example, so full property value, £270,000. With the properties we're looking at in Hadley, then the development shares there are a minimum of 45%, meaning that you would have to purchase a minimum of 45% of the full value of the property. So 45% of 270,000 equals £121,500. You would then own 45% of the property, the landlord would then own the other 55%. You would pay a 5% deposit only on your share, remember? So 5% deposit of £121,500 is £6,075. That would be your deposit amount, leaving a mortgage needing to be arranged for £115,425 being the remainder of your 45%. I hope you're with me still. The rent would then be based on 2.75% of the landlord's share of the value. Now the landlord's share is £148,500, therefore 2.75% is £4,038.75. You divide that by 12, and therefore approximately your rent payment would be £340 a month. Okay. Now actually the properties I'm using for this example in Hadley don't actually have ground rent and service charges that are applicable. So in this example, we can scratch that. So what you're left with is you would be paying a mortgage payment each month and a rent payment each month. Now, if we look at a typical fixed rate mortgage over a typical 35-year term at the moment, we're looking at around 4.3% being a fixed rate typical shared ownership mortgage. That would make your mortgage payment £532 per month. So plus your rent being £340 per month, that means your total monthly cost to purchase this property would be £872 per month. Which is good, you know, you've done that with only a deposit of £6,075 to get a property that's worth £270,000. So I think you'd agree, you know, for some people you can see why it works with that low deposit amount, and that monthly payment of £872 is certainly less by some stretch than you'd be paying if you were to just buy the property with a 5% deposit, not through shared ownership. Now, there are obviously changes property to property, as I said, and it can vary and it will vary. All those figures are going to change depending on your personal situation, okay, so bear that in mind. Now, there are obviously downsides to shared ownership as well. The obvious one is that you don't own all of the property. Therefore, any changes you want to make, you want to put in a new kitchen, a new bathroom, whatever it may be, you're going to have to get permission from the landlord to do so. You may also have the service charges, things like that apply too, but obviously there are more downsides as well. But you know, I want this to be a fairly short, simple video. I don't have time to go into all of them. You do also have the option to buy additional shares, so that's called staircasing, and that's actually enables you to buy a larger share of the property as you move forward with your time in it. Typically, you are allowed to staircase all the way up to 100%. There are rules around that and costs that may be involved, but obviously it's a good option to eventually get you to full ownership. So, in a nutshell, that's shared ownership. I hope that's been useful. It's given you a brief overview on how it works and how it may be suitable for you. As always, feel free to contact me with any questions, comment on the video. I'll be happy to help. My contact details are coming up next. And do remember that your home may be at risk if you do not keep up with the repayments on your mortgage. So that's it, guys, from me. Until the next one, see ya.